In this video, I'm going to tell you the steps I took to pay off over $50,000 of student debt in 18 months. And these are the steps that you should take too. Now, you should watch through till the end because any of these steps could help you save thousands of dollars. So make sure that you do all of these so that way you can pay off the debt as quickly as possible and save as much money as possible. So first, I want to tell you about where I came from so you have a little bit of a reference point. I started out in college being pre-medical, so I was planning on becoming a doctor. I got through all of the classes, did well in all the classes, and then got through to the last semester and realized this isn't what I wanted to do. I was having a harder time retaining information after I finished a class because I just wasn't enjoying it, so I would do well in the class and forget it. So I got out of the pre-medical niche and figured out that I needed to do something else. I was going to get the degree, but I needed a different career path. So now that I realized I wasn't going to make $100,000 a year, $200,000 a year coming out, I realized I needed to learn about money, which is when I started to get into finance. Now, that also came with applying for a bank job. So I started off and applied for a job that paid at the time about $33,000 a year. It got upped before I started 5 months later after I applied. But I started off making $18 an hour, $36,000, $37,000 a year. And I had over $115,000 worth of student loan debt. Now, I was quite overwhelmed at the beginning, but these are the steps that I took to start paying off my student loans, and they really helped me feel like I was making progress and I was paying less money towards the loans because of some different things that I did. The first thing you need to do is to get a good job. You can't start paying off your loans if you're not making any money. So the first thing that you should be trying to do is find a good job, a high-paying job. If you go commission-based, that can turn out well a couple months in or a year in. If you're just being paid hourly, it's kind of nice, or salaried. It's kind of nice because mentally you know how much you're going to make and how much you can pay towards your loans. So number one, you should be focusing on a good paying job. Number two, you should get a credit card to start building good credit. Now this comes into effect later in the steps, but you want to get a credit card so that you can increase your credit score so that eventually you can refinance your loans. Now, I wouldn't go for any credit card with an annual fee. And when you spend the money on the credit card, you must have the money in your accounts to pay it. I don't want you to be buying new car parts that are $800 when you only have $500 in your account. Don't account for any future money coming into the account that you haven't already gotten. So just spend what you have, and try not to spend on anything that you normally wouldn't spend if you were just doing a debit card or just using cash or something like that. So number two, get a credit card to build that credit. Number three, I like to have people set up auto payments. I've helped some of my friends and my girlfriend start looking at their student loans, and one of the easiest things to do is to set up auto payments. I love doing this because I don't want to go into all my different loans and have to manually look at them throughout the month. I don't want to set up calendars and reminders to go into my portals to pay. I'm just going to keep enough of a cash buffer in my checking account so that the student loans can come out at any time and I'll be fine. I think that takes off so much mentally. It's definitely worth doing. Now, this is about the time that you kind of understand about your student loans, how much you have and the interest rates that you have them at. Now, you might have done that before. I wanted to know before I even graduated what I had in student loan debt. But if you haven't, if you're too scared to look, it is very nerve-wracking to look for the first time when you're unsure of what you have. So just go into it knowing that you're probably gonna feel a little bit sick afterwards, a little upset. Just go in with that expectation. It wears off after a couple hours or a day or two. You'll feel better, but it's kind of shocking at first a lot of the time. So after that, you get to know your loans. You get to know what's the highest interest rate loan, what's the lower interest rate loans. You want to start paying on the higher interest rate loans first. So after you set up the automatic payments, you might have to make payment plans in there too. The companies will say, okay, how do you want to pay this back? Do you want to pay a percentage of your salary? Basically, the easiest way to set that up is pay as little on all the loans as possible, and then pay the rest towards the highest interest rate loan. So instead of paying $200 on 5 different loans, if they let you pay $100 on 5 different loans, set it all up for $100. Go with the lowest amount that you can, and then just funnel all the extra into the highest rate one. You don't even have to set it up that one auto pays for more, because if you ever change what you want to do, or you can refinance or something like that, then you're still stuck with that higher dollar amount. So just pay as little on all of them, then do manual payments for the highest interest rate one. So after that, you should figure out how much you can live on paycheck to paycheck. So try to spend less, but just figure out what that dollar amount is, and then keep that for you, but then put the rest towards student loans. So if you can spend only $2,000 a month and you make $3,000, put that other $1,000 towards those loans, with the extra on top of the auto payments going towards the highest interest rate loan, like we said. Now, 6 is a little bit more difficult, takes a little bit more time. It feels a lot more rewarding, but you want to get a raise or build some side income. So I was lucky enough to have one extra way of making money when I came out of school. And then I also did odd jobs, so I guess 2 different ways of making money. I did odd jobs for my parents and for other people that I knew, where I could just make $15 or $20 an hour, painting, landscaping, moving stuff, all that kind of stuff. And I just let people know that I was looking for extra money and that I would be willing to work for it, and people came up with things that they'd be willing to let me do. So that's one way of doing it. I also had that other side income in my training business, and that paid a good amount, but my main job didn't pay that much for my student loans. I had $115,000 in student loans, and I was making $36,000 a year. So after working at that job for about 8 months, I got a raise. That was a $1 raise, so I mean, not huge, but it definitely made me feel better. And then after that, I got another $2 raise, and then I just got another $1 raise. I got some bonuses in there. So you can start moving up your salary, which definitely helps, because as you're paying down debt, when your salary goes up, it makes it a lot easier to pay. But really focus on trying to increase your value at work so that you can get paid more. If you feel like you can't make more money, one thing that I did since I started out of school is I started doing bank account bonuses and credit card sign-up bonuses. I think bank account bonuses are a lot easier to do. They require a little bit more work, but it doesn't have to do with your credit, which a lot of people are worried about. And you just sign up for an account, do a couple transactions or a couple transfers, and then you get, $100 to $300 worth of money just for putting your money in an account for a little bit, and then you still have access to your money because it's a checking account. So I would focus on doing that. I have videos in my channel about bank account bonuses. And then one of the last really important big steps that you're going to do is to refinance your student loans. With this, you can lower your interest rate, and then you can also make the interest tax deductible if the loans weren't already in your name. So by refinancing, a lot of the time you can go from a 6 or 7 or a 10 or 11% interest rate. I've seen up to a 12% interest rate, and you can refinance that to between 4 and 6% a lot of the time, especially since rates have been lowered recently. If you haven't already looked to see if you can refinance, I'm going to put a link to Credible. That's what I used, and they kind of search all different banks and refinancing tools, and they will give you rates, and they ask your income, how much you want to refinance and stuff like that. They like for you to refinance more, but some companies won't let you refinance if you have too much debt compared to how much you make. I know that when I started looking, I didn't realize that there were search engines like Credible, and I looked on SoFi because I heard of SoFi refinancing, and they wouldn't give me a loan. But then when I went to Credible, I figured out I could save about 0.7% off my interest rate, and I went down to a 5.5%, and now I'm looking at refinancing again for a 4.8%. And it doesn't cost anything for you to refinance. Like if you're refinancing a house or something, there's no closing costs. And a lot of the time they actually give you rewards for refinancing. Like I got a $200 gift card last time that I refinanced, and I got a lower interest rate. Like I said though, another big part of that is they can become tax deductible. So when you have the loans, let's say in Parent Plus loans, those are assigned to your parents, so they get the tax write-off. But if you put them in your name and refinance them, then you can write off the interest up to $2,500 on your taxes. So if you're being taxed at 20%, let's say, and you can now write off $2,500 worth of interest, that accounts for about $500 that you'll get back on your tax return, or that you don't have to pay in general. So that can make a huge difference throughout the year too. So I would definitely refinance it in your name if possible to get that tax write-off. So that is one of the most important things you can do. Let's say you were at an 8% interest rate on $20,000. That's $1,600 a year. If you could refinance that to a 5, let's say, then you would only be paying $1,000 a year. That would save you $600. And then if you can write it off on your taxes too, that saves you a lot of money. And then you also get the bonus for signing up, which is pretty significant. So that's what I would do. Now, again, if you haven't looked at that, go to that link. It'll take 5 minutes to put in your information. You might be able to save $1,000 a year just from refinancing or more. So this is kind of how I approached my loans. It was really difficult at first to wrap my head around all the stuff that I wanted to do to lower my payments, but I lowered my interest from about $20 daily down to about $8 or $9. I pay $9 a day in interest right now, which is a significant drop. At this point, I have $70,000 worth of loans left, or just below it, but my interest rate is about 4.6%. So I'm not worried about paying them off as quickly as possible because my payments are low now. Now that I refinance over a longer term, and my interest rate's low, and I get to write it off. So even though I'm paying 4.5% interest, I get to write off the interest on my taxes. So really it ends up being below 4%, more like a 3.7, 3.8% that I have to pay on my loans. So I'm not in a rush to pay them off anymore. I'm building up my cash to invest and to put a down payment on a home so that I don't have to pay as much in rent. So that is how I approached it. I would do the same thing again in a heartbeat if I was going through this again. This is how I help my friends and my family approach their student loans. So do that and let me know how it goes. I appreciate it, and I will see you in the next video.